Can the ICICI Pro Savings Suraksha plan offer protection and savings in one package? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. So now before analyzing this policy, let us first understand what is this policy is about. So this is a participating non-linked life individual savings product. Now let us take a look at the key features of this policy. You can enjoy life insurance coverage throughout the policy term, and you can receive the guaranteed maturity benefit, accrued guaranteed additions, and bonuses upon the policy maturity. And you can even customize your plan by selecting the premium payment term, mode, and policy term to suit your needs. And you can also benefit from tax advantages on your premiums paid and payouts received, which is subject to the prevailing tax laws. So these are some of the key features of this policy. Now let's move on to understanding the benefits available under this policy. So there are two kinds of benefit. One is a death benefit, which you get as a nominee or the legal heir once the policyholder passes away during the policy term, unfortunately. So out of the three options mentioned on the screen, whichever is highest out of these three options at the date of death, that will be payable as the death benefit. Now the maturity benefit is something the policyholder will get when they have survived till the date of maturity, and they will get this benefit once the policy matures. So the all these options mentioned on the screen will be available to the policyholder as the maturity benefit. So these are all the benefits available under this policy. Now let's move on to understanding the advantages and disadvantages of investing in the ICICI Pro Savings Suraksha plan. So the advantages are you can avail a loan of up to 80% of the policy surrender value, and you can enjoy the flexibility to select a premium payment option tailored to your financial requirements. So these are some of the advantages. Now the disadvantages are the returns offered in this policy are relatively low, and a portion of the benefits is non-guaranteed as it depends on bonuses. The sum assured provided from this policy or may also be insufficient to meet the basic financial needs of your family. So these are also some of the drawbacks that you need to carefully go through and consider before choosing to invest in this policy. So now, as we have a basic understanding of this policy, let's move on to analyzing whether investing in the ICICI Pro Savings Suraksha plan will be good for us in the long run or not. So to properly assess its investment potential, what we are going to do is we are going to calculate the internal rate of return IRR of this policy to delve deeper insight into this policy rather than simply reviewing its cash flow. So let's examine the internal rate of return from the benefit illustration provided in the policy brochure. So just for example scenario, let us assume that a 35-year-old male opts for this plan with a sum assured of 3 lakhs. So a policy term of 20 years and a premium payment term of 10 years, paying an annual premium of 30,000 rupees. So at maturity, he receives a benefit comprising guaranteed additions and bonuses. So the example here where we are going to calculate the IRR is divided into two-way future investment return rate of 8% and 4%. So both of these returns indicates best and worst case scenario respectively. These are not guaranteed returns, as the returns from this policy depends on various factors including future performance of the policy. We are calculating the worst and best case scenario at 4% and 8% per annum just for the example scenario, just for the assumption purpose. So at 4% scenario, in the worst case scenario, you can see the maturity value of this policy is 4.18 lakhs, which results in an IRR of 2.16% as per the ICICI Pro Savings Suraksha plan maturity calculator, which if you compare with a savings bank account rate of interest, it is even lower than the interest rate offered by savings bank account. So this is for the worst case scenario, right? Now, if you calculate the 8% scenario, which is the best case scenario of this policy, the maturity value you get here is 6.88 lakhs. So it yields you an IRR of 5.43%, which is still below the returns rate of return you can get from a bank fixed deposit. These returns are suboptimal, and also they are not guaranteed, as the returns from this policy depend on the future performance of this policy as well. So that means this returns can go even lower than what we have calculated here. So making this makes this policy a less effective tool for achieving your financial goals. Moreover, the life insurance coverage provided under this plan is also inadequate to secure your family's future financial needs. Therefore, both the investment and insurance aspect of this policy fall short of expectations of any investor. So, as per the IRDAI guidelines, the minimum sum assured for a standard pure term policy like Saral Jeevan Bima plan is 5 lakh rupees. So, any sum assured below this benchmark, such as the 3 lakhs we saw in the ICICI Pro Savings Suraksha plan earlier, fails to provide us with sufficient financial support for a family. So, what we are going to do is we are going to re-evaluate by doing a comparative analysis where we are going to consider a minimum life insurance coverage of 5 lakhs and separate investment from the insurance component and invest in investment separately. So for example scenario, let us assume that the premium for a pure term insurance policy for a sum assured of 5 lakhs with a 20-year policy term and a 10-year premium payment period is only 4,400 rupees annually, whereas we paid 30,000 rupees in the ICICI scenario. So this leaves us with 25,600 rupees available for annual investment, which we can allocate based on our risk appetite. So if you are a conservative investor, you can opt for PPF, public provident fund, while if you are a risk tolerant investor where you are able to take a lot of risk, then you can prefer ELSS, which is an equity linked savings scheme, which is also a tax saving tool. So if you look at the PPF scenario, the annual contributions are adjusted to meet the minimum requirement, because here we only have 10-year premium payment period for the policy, while the PPF investment requires you to do minimal contribution until 15 years. So in the final years, we have adjusted to making the minimum contribution of 500 rupees for the last 5 years. So in this scenario, you can see the PPF matures to 7.54 lakhs, delivering an IRR of 6.04%, which is still higher than the 8% scenario considered in the ICICI Pro Savings Suraksha plan of the best case scenario of the plan. But here it's giving you a guaranteed return of 6.04%. This is also for a conservative investor who wants a guaranteed return, as this is also a government backed product. But if you take a look at the ELSS investment, which is something a risk tolerant investor could invest in because it has a lot of risk, but assuming historical equity returns of this product, we are assuming the pre-tax maturity value is 15.62 lakhs. After accounting for the capital gains tax, the post-tax maturity value stands at 14.15 lakhs with an IRR of 10.25%. So this comparative analysis highlights to us that separating insurance and investment is a superior strategy, because traditional insurance plans typically offer limited coverage and modest return, whereas combining a pure term insurance policy with tailored investments like PPF or ELSS provides us with better financial outcomes in the long run. So now what is the final verdict on the ICICI Pro Savings Suraksha plan? Is it worth investing for the long term or not? As you can see from our analysis that this policy promotes regular savings habit but falls short of utilizing these savings effectively for higher returns. Its sum assured is insufficient to meet the basic financial needs of a family, and the saving component delivers below average return. Consequently, the plan's insurance and investment aspect also provide little value to investor. So investing in the ICICI Pro Savings Suraksha plan may lead to significant opportunity cost, as it limits the potential benefit and return your money could achieve elsewhere. Traditional policies like this can disrupt your financial plan and leave you unprepared for future financial challenges. Hence, the ICICI Pro Savings Suraksha plan is not an ideal choice for your investment and insurance needs. And also, this policy has a high agent commission, which you need to remember. So, a better investment strategy would be to safeguard your family's financial future. You can opt for a pure term insurance policy where you can get higher coverage even for affordable premium, while investing separately to achieve your financial goals. This approach ensures you stay financially resilient even during tough financial times. So diversifying your investment across asset classes is the key to achieving your financial aspirations.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.